All right, let's get the microphone check out of the way here before we start. Let me know if you can hear me across the various streams that are going on right now, including the public one there in YouTube. I do see quite a few people in the stream over there, so if you can let me know if you can hear me okay down in the chat, that would be much appreciated. And for those of you in some of the other streams going on different platforms, please let me know if the audio levels are okay. And we're going to get started here in a little over a minute. All right, so it seems as though the audio sounds good. Thank you guys for helping me out with that. And we're gonna get, excuse me, we're gonna get the music under control here. My voice is a little out of sorts today, so I'm gonna apologize ahead of time before we even get the stream rolling here. It was a little bit of a rough weekend, but I'll explain in a moment why we didn't have any Bitcoin in 60 seconds videos for the past few days. Let me get this sorted over here, and we're going to get rolling right into Macro Mondays. So hello and welcome to Macro Monday Market Analysis here on Landy's Crypto Corner. I'm your host, Landy. Today is November 20th, 2023. And up front, I do want to apologize for not having any Bitcoin in 60 seconds videos. I was going to upload one on Friday or over the weekend, and unfortunately I didn't get around to that. For those of you that do know me and do know me personally, I have a son who is disabled and he suffers from seizures, and he had a pretty big one on Friday. So spent the latter part of Friday and through the weekend just tending to him and making sure that he is okay, and he is okay. He was just a little out of sorts as it was a pretty major seizure on Friday. So now that aside, I just wanted to quickly say, I apologize for not having anything up, but darn good reason for not having anything up. So in this case, Bitcoin did hit pretty much all of our targets that we were looking for since the last Bitcoin in 60 seconds video and yesterday and Friday's live stream. So we had we had Bitcoin come down and spike the close open from the 14th into the 15th of November here. And I had mentioned in the Bitcoin in 60 seconds video, as well as on Friday's live stream, that if Bitcoin traded back above the weekly here at 36,200 to 300, then I was looking for it to head to the upper first. It did spike that area. It held the weekly, and the next upside target was, well, the weekly here at 37.7, and we just got that in today's wick high. Now, if it does push on from here, I would be looking to the wick highs at around $38,000. And then up to the monthly at 38.5. Above there, the weekly at 39 to 40K. And if we do see a breakout above there, I would be targeting the weekly up here at around $41.8 to $42,000. Now, I wouldn't necessarily be looking for it to run straight there, although we have seen price do that. It's really about getting a daily close above this weekly, showing that 39 to 40K can be reclaimed. And then over time, I would be looking for that 41.8 to 42K, maybe more. maybe more to be quite honest. We'll take a look at that in some of the longer term time frames, as well as today is the macro video. But I did want to cover, excuse me, I did want to cover some of this. If Bitcoin does drop that upper first standard deviation, I would say around 37 to 37.2. Be aware of that weekly again, because the basis is coming in right below it there at 36 to 36,200 or so. If that is lost, I would be looking right back to the lower first here at around 35,200 to 300, into that monthly at 35K and weekly just below at 34,750, where we saw this most recent wick low come in nearly to the penny. Below there, I would target the lower second at around 34.3 to 34.5, and then $34,000 at this wick low. The close open at 33 by the lower third, and then below there, that daily untested area at 32.4. By the way, when I say untested, that doesn't mean that it needs to be tested. It just is an untested level, so there would be demand in that area down to the area that was previously tested as resistance back here in the prior run-up to 31.8, and that was back in July, and that would be the daily, weekly, and monthly level. So, below there, the weekly is at 30,600 to 300. I don't think that Bitcoin is headed in that direction currently. I do think it's going to test these highs and maybe higher sooner rather than later. Maybe today is the day. Maybe this is all we get. We don't really know, but the criteria is pretty clear as to which levels to break and hold on a close open structural basis. And from a volatility standpoint, we are seeing that volatility is decreasing. It's 42%, and the moving average is above it at 54%. So if we pull up the BBWP, you can see that it is a contraction phase while Bitcoin is going sideways and up. This is very similar to what Dixie did. Not quite as parabolic in terms of its structure, but we want to see multiple drives of bearish divergence build on the daily, have that head into the 2-day, 3-day, 4-day, 5-day, weekly, so on and so forth, before really looking for any kind of a major reversal. And in this case, we do have bearish divergence, but nothing that has been confirmed on a high-to-high basis without, you could make an argument for this high back here on the 25th of October, and the most recent one being a corrective drive. That would be your first drive of bearish divergence. You want to see 2 to 3 for any kind of a daily reversal of structure. I'm probably in the camp of, even if we do see, I think this makes another higher high before we see, a low getting taken out in a long form consolidation. We kind of already are in a longer form consolidation, but it's sideways and up. And when I say long form consolidation, I mean, a consolidation that might lead to a daily downtrend, even if it is brief. It's tough to say. So I want to caution those who are getting bearish around some of these areas, because prior market cycles, it was very easy to get bearish back here in 2020 when, Bitcoin was doing much of what it's doing now. So a little bit of a warning, Bitcoin was doing something very similar just before the market really took a giant leg up to new all-time highs. And this was, kind of the August period. So we had July into August of 2020. We did see a downtrend emerge, and it was just very, very brief right here, where we then got a bottom around the previous lows, then a spike up to a lower high, and then a dump off to lower lows, and then trend resumed. So this is kind of what I'm talking about. We may or may not get a structure like that. And when investigating this a little bit further, when looking at things like volatility and momentum, you could see that this structure, very, very similar to that July into August structure. So I would caution, though, because of where momentum is, and I was pointing out to some friends of mine here of the channel, this particular momentum pivot, and that was I think it was like, what was it? It was 30. Let me go and look actually, because I don't recall. It was 36 100. That was the momentum pivot for the close yesterday. And then, it was pretty obvious making, putting in a nice low here in terms of this current candle structure was going to push prices to at least test somewhere around the highs, which is, it's testing this high over here. It already got the close right on it and above it just slightly. And then it's going to go most likely test the next high area, even if it is a lower term time frame rejection. It is something worth watching. If we do see a close above this candle close here from the 15th, which is at 37,855, so somewhere around 37,900 to 38K, then I would look for it to take the next step up to around that 38.5 monthly, possibly $39,000 to $40,000, even if it is brief. And if it does get continuation, great. This is looking quite good right now. Momentum is currently pivoted at 37,252. So that is something to watch, as Bitcoin is only trading about $300 above there right now. So, we could see it just kind of waffle around the bullish control zone of momentum. And again, daily reversals, I want to see at least another drive of bearish divergence, which in this case means another higher high. That's the only way that is going to occur. And then from there, see where things come in with a subsequent third drive of bearish divergence, whether it would be a higher high or a lower high, because it would be in that particular setup of in terms of phase where things are currently. Right now, it looks very strong. Still looks very good. Obviously, you can't fight a parabola structure on the longer term time frames like this. You just got to go with it. And there's many that are not, and it's a little silly to be looking to some of the targets I'm seeing to the downside. I don't quite understand where those folks are coming from in that camp. And I am talking about, like, I'm seeing again crazy downside targets like 5, 8, 10, and 12K from here, and it's like, that's just not realistic right now. As I've said before, there's no way to trade that. Like, you got to trade what's in front of you. And in this case, the 2-day, which is going to be closing with today's candle, the upper second standard deviation is in play if Bitcoin can close above the upper first. So the upper first is currently coming in at 36,990, so $37,000. A close above there, brings the highs into focus, which, it's pushing on a closing basis, but brings that $38,000 high into focus. And then the next area to the upside, there would be the upper second around 40,000. In this case, coming in around 40,350. If we do see the upper first close below, then we can start looking at local structure around this close open on the lows here. On this last, what's looking to paint as another higher low. We have the close coming in at 35.5. The basis band has moved up to 33,640, so about 33,650. I do suspect that's going to be somewhere around $34,000, somewhere around this 2-day order block candle, where the close is coming in at $33,900 to $34,000, depending on your exchange. So, this does look as though it wants to keep heading up. And this is something we discussed in Friday's video, so we're already kind of biased to the upside, particularly because of the way the 4-hour was resetting. The 2-day momentum pivot is 37,721. Now, Bitcoin is currently trading below there, but because it's in the process of potentially putting in and locking in another higher low, granted that big wick up could be a topping area. We don't know until it gets there, or if it gets there. But, in terms of closing structure, this would be a higher low. And when you see momentum heading down, it's obviously chasing close over close momentum, because we are using a regular Stoch, not a Stoch RSI. So this is not velocity of RSI. This is not a derivative indicator. So it's not an indicator that's reading the momentum of RSI. This is reading the momentum of the close over close price structure. So in this case, we would likely see this turn back up or get another cross up if we see another close with a low set and then a subsequent close higher than that. So we're looking at 3-day closing today as well. It has maintained its structure above the upper first standard deviation, which is coming in at 35,630, giving us an upside target to the upper second standard deviation somewhere around that 39 to 40K. If we do see that 35.5, 35.6 dropped, that's right around this close open. So it would be dropping the 3-day close open, which we have an order block candle in. Then we look to the wick lows somewhere around that 34,750. And then below there, we have the structural areas around 33 to 34K on the daily and higher time frames. And then the basis has moved up to 31,400. I do expect this to move up to somewhere around that 31.8 breakout region, somewhere around these highs over here after close today. Now for the 4-day, so we've got a 2-day, 3-day, 4-day closure. This is big, right? We have the upper second standard deviation still up here in that $39,000 to $40,000 area. We've got the upper first at around 34,600 right across these close opens here. And again, it's coming in around these wick lows. So if we see those wick lows breached, then we're looking for a markdown in price. And in this case, we have the $33,000 close open matching up with the daily 2-day area. 3-day is an outlier at 34. And below there, we would look to the basis somewhere around wherever it updates. It's currently around that weekly area at that 30,300 to 600 area, kind of just below the 30,300 by $25. I do expect this to move up fairly significantly close over close. Now we do see that momentum on the 4-day is at 37,150. When looking at that 3-day, it's at 36,875. So you'll note that the daily is up above 37,250. The 2-day could turn, but it's got to be a close over close turn. And in this case, a higher low rather would do it today. You still need to see it take out the wick highs though, that being at $38,000. And then we would see a 2-day turn to the upside. 3-day is currently turned to the upside at 36,875. That should update to somewhere around where the 2-day is, maybe even higher to 37.5 or so. And the 4-day is up on any closures above 37,152. I do expect this to head towards the highs. It's probably going to be right on top of price action. And the 5-day is at 36,750. So we have some of these higher term time frame momentum pivots catching up to price action here, as my son is very happy about something in the background here. Now the 5-day is not closing today, so we've got the 2-day, 3-day, 4-day, the trifecta closing with the daily. That is going to be big and probably going to inform, Bitcoin testing the highs around the upper second standard deviation of the 5-day, which it's doing now. Whether or not it gets there, who knows? If it gets above, we're going to see volatility continue to increase. We're going to see the move become more biased to the upside, even on pullbacks as time continues on here. And the upper second is above the $38,000 wick high, coming in at around 38,100 to 200, depending on where price is trading. This will update live. So keep an eye on it. The upper first coming in right at the close open here at 33,900. So this matches the 3-day with that close on the 3-day, 5-day coming in around 34K, whereas the daily, 2-day, 4-day has the close open structure there at around 33. So that gives us our 33 to 34 confluence. And this is going to be a big area if Bitcoin does pull back. Below there, of course, the basis is continuing to rise here, now at around 29,600. And I suspect this will be 30,000 to that 30,600 area where the weeklies are very soon. It's getting very close. So looks good. We are continuing to see, the momentum pivot is not really what I'm interested in there. There's no in-trend bearish divergence, by the way, so we do need to see. I mean, technically you could get some, but nothing that's really worth talking about. More just corrective if it were to put in a high here soon. But in this case, BBWP is indicating that this is not ready yet. We're likely to see, if it does not push above that upper second standard deviation, we're likely to see BBWP and the moving average begin to converge on this next close open. So I would be aware of that. But remember, even if BBWP is beginning to converge, we will still get residual expansion of the upper second, first standard deviations, and of course the upper third up there, because the basis band will continue to rise, and it's 1, 2, and 3 mathematical standard deviations away from the basis band. So we'll get that residual expansion, thus extending those upside standard deviations, and likely what we will begin to see is the lower standard deviations curl up into a bullish posture. Now that's a very good thing. That's actually something that I've been waiting for here to kind of give us an indication of whenever we do see any kind of major sell-off or dump or markdown, that those are in a position to kind of quote-unquote catch or line up with major areas of support and resistance. And currently, the lower first here on the 5-day is skating across the lows here at around that 25,320. I would like to see it above this prior higher low at around that 26,500. And then, of course, see those lower standard deviations, the lower second and third, begin to curl up below this last major low area. And that then brings it out of a more range-like structure with an expanding range and more to an upside breaking structure that has a sustainable 5-day closing uptrending volatility structure to match its actual trending structure. So that is what we are looking for next. The weekly, of course, we're looking for the same thing. The expansion is really just kind of getting rolling now, with the BBWP at about 67 over 49. The upper second is continuing to be tested here, and that is coming in at $38,000. The upper first, big area, of course, at that 33,900, so 34K. Again, we keep seeing that come up over and over again. So on any kind of pullbacks locally, if we see 35K broken, be aware that 34K is going to be the big area to watch. Below there, 33, maybe less so at this point, because some of these higher term timeframes are lining up more with that 34K level. Now, yes, 33K would be relevant to see if it holds up if Bitcoin did trade there, but 34K is going to be the big one. Below there, the basis band is coming in there around $30,000. I expect this to be somewhere around those weeklies again at 30,300 to 600, and above, maybe even to that 30,800 to 31K area. Lower first, again, same deal as with the 5-day. We want to see the volatility structure of the Bollinger Bands, or the volatility levels of the Bollinger Bands, begin to curl up. That's going to take a little bit of time, right? It's going to take a couple weeks. Want to see how this month closes out coming into December, and especially if we get some sort of an impulsive structure to the upside, we'll quickly see those lower standard deviations spike down and then curl back up. And we are, looking that way. We've gotten, 4 weekly candles above the upper second standard deviation, though. So even on a lower term time frame, below the weekly, that does, it does tell me that be aware of giant moves to the downside in terms of, daily price action, or maybe even lower than the daily. That's kind of where I'm at with that. And again, when looking at the monthly, this is teasing a parabolic run. And, I'm going to say it over and over and over again, so please bear with me. But every time Bitcoin is closed a candle above the upper second standard deviation on the monthly time frame here, we have seen a new all-time high. But It's a big button, I will not lie. Right above us, we have overhead resistance, right? So if it does close above that 38.5, it would be taking this low, but there is this high structure right here at 45.5 to the highs at 48.200. And that would be above the upper third standard deviation. So be aware of quick rejections there. And again, we need to see closes above. Now, we have seen closes above that then come down to the upper first and then hold it. And every single time that we've seen a close above, though, we have seen a new all-time high. So the only difference being now there is a pretty major high directly above price action, whereas before it was only the all-time high. And in this case, we are looking at, that to get taken. And then, of course, once that is taken, we're looking for an all-time high run and higher. And at this point, we also still it needs to be said that the upper second standard deviation has historically also rejected Bitcoin here. So that does mean that, Bitcoin can trade above into that upper third or even higher, could trade to new all-time highs. Well, then it does, it's not looking, then we would have our target hit. But what I'm trying to say is if it closes back below, that has indicated that it is not ready yet. We look to that upper first, possibly the basis. It's a little bit more bearish when you see a rejection there than a closure and then a 3-candle structure that comes back down for consolidation. But, we just have to evaluate it in real time. We have a different structure than we've ever had on Bitcoin before. So this is where we just need to put on our critical thinking hats and really analyze what's going on in the market in terms of, volatility, in terms of momentum. What does the structure look like in terms of trend on the lower term timeframes, especially the weekly. So the weekly, if it's still uptrending and it rejects and it's just consolidating, then it's probably going to, follow through with that monthly to the upside and make a run for that 45.5, 48.5 and higher. I would expect, probably even if it does hit up there to this high, it's probably going to see like 50,000 because it's a nice round number psychologically to get some rejective price action at as well. And in this case, 27,400 being the momentum pivot, very good. And we've talked about this prior as well. And that is that the bi-monthly here closing at the end of the year is at 23,800. And this, is set up for an initial rejection at the upper first, which is at 46,800. It's 46,766, but it's likely to be around 48.5 if Bitcoin does continue to push up towards it in between its closes. So this does mean before the end of the year, if Bitcoin starts to march towards, the mid $45,000 level, then I would be looking for this to, as it moves up towards that upper first, for the upper first to adjust in real time to somewhere around the highs here at that 48.5 level. So that is, going to be a big one. Now, if Bitcoin closes above it, the upper second is right at the high. So I would be looking for an all-time high run. It's currently coming in at 59,800. I would expect it to be somewhere around the 60s to mid 60s and higher should we see Bitcoin start to get above that upper first and push that upper second. That is provided that we see this moving up towards it in between its close. Because if it does close the end of the year and Bitcoin's around the basis, we're likely to see it go sideways. If Bitcoin is closing somewhere around the $33,000 to $34,000 level, where the basis is coming in at $33,725, we're likely to see this move up to $34,000 to $35,000. And if Bitcoin's right on it, we're just going to see the upper standard deviations continue to skate sideways in their current positions as we get compression, because we are seeing a volatility cool down. And that's, it's not quite ready yet to spike. When we do see it spike, it's going to be, oh boy. Yeah, you see the way this is just kind of dropping off a cliff with volatility. That's because Bitcoin is trading at and closing around the basis band. And, this is a 2-month time frame. So when we do see volatility kick off, like back here in 2020, we're looking at May. We saw the volatility uptick over it in July, and then it didn't really take off till September. And of course, that's that was where we also, in between that, we had that August to September correction. But this was telling us like, hey, you better be aware. This is going to probably get picked up. Volatility is going to move to the upside in this case. So, there are some in the camp of we're going to make new all-time highs this year. If anything, the way that the volatility is set up right now, as it currently stands, it's set up more in the manner or more in the camp of it has the potential to get to the all-time high, but it would very likely be a very harsh rejection there. Time is short, right? And it takes a while for volatility structures to mature, especially when you're looking at a bi-monthly or a monthly time frame. Now, the monthly might just kick things off if we do see a close above that upper second. So just be aware, 38,500, we see closes above there. Very, very, very likely that we see a big leg up to this next high area into that 48,500 high. So, all right. I think that about wraps up the more macro stuff for Bitcoin here. Let me jump over into some of the chats here and see if anybody's got any questions or comments real quick. And then we're going to go take a look at Dixie. First question right off the rip, look at the lower term timeframes in the daily. Okay. So if we look at the 12-hour, it's a range. Quite honestly, right now, this is a range between the upper second and lower second, as I see it currently. So 37,800 to 38K. If Bitcoin starts pushing towards that upper second, it will adjust up. And the lower second coming in at around that 35.5 to 35.8 or so. And this is not telling me much. You can see that that this range in terms of the standard deviations away from the basis here, obviously being above the basis band is it favors the bulls, obviously, and closing above the upper first favors a run to the upper second. So we can see that volatility remains high within this range at 73 over 68. So we do have expansion, but it's just kind of sitting sideways in terms of its volatility expansion. So we're seeing slight expansion to the upside and downside of the upper second and the lower second here. In this case, closing the next 12-hour candle, that would be today's daily close, above 37,122 would favor a run to somewhere around the highs at 38K, and then possibly higher if it can close above there. What you'll see is this was a high-level consolidation for volatility, and I would expect it to spike up, somewhere around the most recent highs in the 80s, or, if it gets really aggressive, into the 90s and 100 percentile. The momentum pivot is going to be there at 36,500. So this is very good for the bulls right now. So yeah, looks good to keep trying to the upside here. The only counterpoint to that would be if it puts in a high that drops the basis band, right, in the next couple of candles at 36,700. The low actually came in at 36,760. So, closes below there. I would be looking back to this basing structure down here, somewhere around 36.5 to 36K. Buy the lower first, maybe swing it, and then come back to it later. But as it stands right now, this structure favors the bulls. The momentum favors the bulls, and even the volatility at this point favors the bulls. Now, in the shorter term, you do want to see it, close this next candle probably above 37,500. If it can close above there, then it's, looking for immediate continuation to test up higher to 38K. What is the likelihood of that when looking at the 4-hour? Good question. When looking at the 4-hour, this is expansion to the upside right now. It's not super aggressive, but we did get a close. If it can close another candle above the upper second at 37,600, then continue expanding to the highs. Basically what we were just saying, 38,000 above there, 38.5 at the monthly, 62 over 56, telling us that this is a sustainable move to the upside for now until we see a high put in. And momentum in this case is at 37, 672. So basically 37.7. Now, because Bitcoin is trading below there, we will see a momentum shift. But until we see a high put in, it's going to favor the upside, and it's not realistically going to put in a high. It could put in a closing high locally, and any closes back below this open. And this open is coming in at 37,100. So basically 37,200. You start seeing that upper first lost. That is going to be, where it would start to put in a technical high. But as long as it's above the basis and the most recent wick lows at 36,760, it's looking, sideways and up still. And likely to see a bit of a momentum reset. In this case, I wouldn't be just favoring the pivots. You have to weave that pivot into what the structure is. And in this case, we need to see a high structure put in order for that pivot to be relevant, as it is pressured down or it's running out its momentum to the upside, but volatility and higher low structure is in play right now. It did put in a higher low on the previous candle, and then it, tested right down into it. So, the prior 4-hour candle, closed on higher highs. It did not break the wick high. This wick high seems to be a battleground there at 37,500, but if it does close above there, it's continuation. And in this case, it just put in this higher low. So it's either going to top here and then come back down and take out the lows, or it's going to continue to push higher. So I would say, that I would favor the 12-hour and then just keep an eye on structure on the 4-hour and how things are closing in the next couple of closures. End of day close, obviously, into the early portion of tomorrow, and then overnight, specifically coming into the New York session open on Tuesday. So, yeah, cool. I'm glad that that I got to answer that for you. Good question, by the way. All right, let's go ahead and take a look at Dixie. Dixie hit our downside target, I believe. Yep, it did, and it broke through. Excellent. So we got our 103.50 target hit. Next area is going to be 103, somewhere around this next low. We can just kind of mark that off here. Somewhere around 103.10 to the wick here at 102.92. Split the difference, or 93. Split the difference, so you got 103. Below 103, I'm looking for 102.50 to 102.60 down here by the lower third. And below there, 102. Below below 102, things really start to accelerate to the downside from the higher term time frame perspective. So Dixie dumping off, hitting our downside targets, looks good. It's not ready yet to really bounce until we start seeing at least a 3-candle low put in, and it's pressure down below 104.57. When looking at the weekly here, we've got 106.77. This looks like it wants to make a 102.5 run. If it stops somewhere around, it looks like it wants to run to that lower first, which is around 102.36. If it doesn't make it there, it's likely to be around 102.50. Below there, then we're looking to 102. And then down into this support zone in the 100 to 101 region, where the lower second is starting to curl up into. Below there, it's below the supports here at 185 cents to 101. That is 146 cents. So what I would say is we could even see a wick into like $100, but it's likely to get a very strong bounce there if it were to get there. So one step at a time, though. Next big target below 103.50 is going to be 103.10 to 102.93. So split the difference. We can just call it 103. Looks good on the downside there. And, this is this is what I was talking about, this entire time up here around the 107 region. It could have threatened and expanded back to the upside, but that bearish divergence that was building over time that we were looking for on this entire move up was, it's going to keep continuing until we see at least, a couple drives of bearish divergence. Once those were set, then we were looking for either a consolidation to continuation or a consolidation to reversal at minimum. And we saw the reversal now. It's still expanding. So BBWP is still expanding, telling us that this move is going to continue to be pressure down, even if it does start to put in a little bit of a low structure here. But this is continuation as it stands. Let's go ahead and look at gold. Gold is, in lower high territory right now still. So, we talked a little bit about this on Friday, and that is that, after this big move down to this violent move back to the upside, looking for consolidation structure to be built here. This would be a 3-candle high, but unless it closes below the lower first, we're looking for it to kind of just go sideways, right? We see that reflected in the volatility of the bands, kind of setting up for a range look. In this case, any closes below the lower first at 1957, it's right around that wick there at 1953 that we would want to pay attention to, because below there we'd be looking right back to the low somewhere around the lower second in the 1940 region. If we did see closes below that then subsequently break that wick low at around 1930, then we're looking for expansion to the downside, likely into the 1900 to 1890 region. And the same goes for the upside here. Take out the upper first at 1990, take out that little wick high just above at 1993, then we're looking to the upper second standard deviation around the highs there at 2005 to 2010. If we do see closures above there, we're looking for expansion, but there is resistance right above, and it's big resistance at around 20,016. But I would be looking for that area to kind of get tagged at minimum, 20,015 to 20,020, or 2020 to 2030, so on and so forth. And then we can make all our Agenda 2030 jokes when it gets there. Now, the 1940 pivot, well away from price action currently, but it is accelerating towards this consolidation. So keep an eye on it. We will keep an eye on it this week, and I suggest you do in between the streams and videos. The upper first standard deviation did get closed above, but gold is threatening, and this is on the weekly rather. It is threatening to drop that in the early going here. Of course, a week is going to be a long time frame to watch. So over the course of the next few days, we do want to keep an eye on this. Again, it was a downtrend break. If we're going to see a higher low, we can get back tests down to the basis band, no problem at 1936. I would just be aware anywhere below 1930 that this is probably going to take a deeper dive down to the lower first, which is coming in at 1893 right there, lining up with our support resistance line. So that would be something to watch this week. Now, if it can maintain in and around the upper first, I would favor the upper second area over time. And this is coming in at 1979. So above 1980, I would still be favoring the local highs around 2000 all the way up to the upper second there at 2022. Now, if it does close below the upper first, just, we're looking at between the upper first and the basis. Only when it drops the basis and specifically takes out that wick low at 1930 am I looking down to that 1890 to 1900 level. And I would still be favoring a higher low being put in there, just so you understand. And, everything's kind of pointing to this being just a lower term time frame pullback right now and a little bit of consolidation before trying higher. But that's never a guarantee. Just that can change very quickly. So just understand that. The 1977 area is the pivot on the weekly. But reminder, the 2-week did just get its close open, and it's pivoted at 1873. So even on pullbacks, yeah, and you can see the compression going on in the 2-week here. Really starting to squeeze in. We can see the lower second now coming into that 1860 area. The lower first coming into the 1904. So there's our 1890 to 1900 area. and the basis now coming up to that 1950 area. Very good, very good. So this is actually what we want to see. We want to see a compression, and we want to see this kind of continue to compress a little bit. Maybe in the next 2 weeks, have it kind of go sideways. Maybe even get that weekly turned down before it tries higher. If you want to see like the deeper $2,000 region to the upside, maybe get a little bit of a bullish reset, even if it's in the over bought zone on the weekly, and have the 2 week just kind of drive things up. 2 week is going to be pivoted at 1873. So, unless that gets taken out on a closing basis, and even then, that would only be an initial cross down and likely reset the daily and timeframes under the weekly to try higher. So if we do see closures in the next 2 week candle above 1994, 1995 or so, I'd be favoring again a run to 2000 to 2010 and 2010 to 2020. We can see the upper second is there at 2040 right now. So that'd be a nice big move up in gold, and likely dictate its continuation coming into the end of the year and first quarter of next year. And would that match yes, that would match. That would match for a run to, the lower $2,000 region around 2,075, 2,100, at least as being a favorable position if gold can maintain this upper first standard deviation around 1970. So now, of course, that's going to be something to pay attention to towards the end of this month. And then, of course, wherever it is in the December open is going to be the big one watching coming into the end of the year. Monthly is going to turn to the upside this month on any closes above 1934. So something to keep in the back of your mind as we head into the final week and a half or so of price action on gold here. Now let's go ahead and jump over to traditional markets, and we do know that traditional markets are probably going up if Dixie is dumping down. Not always. It's not going to be a straight line, but they're probably heading up, and look at that. They're green, and they are breaking through some of our local resistances and heading on to, well, quite frankly, some of the targets that we talked about on Friday. And this is not completely unexpected. Continuation to this structure right here, where there's a little bit of a gap, is kind of the next big area at 35,200 to the high here at around 35,350. So about $150 or 150 point range up there. Above there, I would be looking to the upper second. We do favor the upper second as long as we are closing above the upper first. And in this case, if it is breaking out of this overhead resistance area, and especially if it closes above this high over here at $35,070, then I would be favoring a move to the upper second over time, and that is currently at 35,531. That's right around the high structure here. If it can break out of there, well, guess what? We're looking much deeper, 35,800 to 36K and beyond. So now this is where we can see the Stoke remain overbought for quite a while. 35,100 is going to be the pivot on the daily. Just want to check the 2 days, getting up there as well. 35, 3 days probably getting up there. No, 3 days saying this has got legs in the longer term timeframes and likely to get bullish resets on those lower term timeframes as it's coming in at 33,000. The 4 day is going to be chasing quite heavily at 32.8. The 5 day is all the way down there at 33.1. Well, to be fair, the 4 days is lower than that, but the 3 day and 5 day are matching, which they should. And the weekly should be there at 32.8. So very good. This is looking like it's got legs to continue. We want to see follow through. That, as I mentioned, we want to see follow through this week. If it is going to, continue to test the local highs here and higher. The weekly coming in now with that upper second above the wick highs here, and that's at 35,900. That's our $36,000 area if Dow continues to push, and especially if it closes above this upper first standard deviation, which is around 35,130. So, it's momentum is chasing, but the longer term timeframes are saying that lower term timeframe momentum will probably, Most likely bullish reset. Most likely. That's the more favorable position to be taking on that. And then of course we've got a legit breakout on the weekly here, and this is exactly what we expected. Now we've got a legit breakout on the weekly from the daily time frame, but let me caution you. We need to see it close above this wick high here on NASDAQ. And that wick high is coming in at 15,425. So that's going to be what we need to watch this week. It is pushing the $16,000 area. It's at $16,015 right now. It's pushing as we currently speak. And this was the next big area that we were looking for to the upside. If we do see closures above here, it's gonna run to the all-time high. I mean, like that's it. And all those macro thesis guys that are all over crypto YouTube and Twitter about, get your money out of markets, everything's crashing, you become, hold cash and like wait for the big dip and like all this. Well, boy, weren't they wrong, huh? So yeah, we're looking to the highs and higher, and quite frankly, I mean, we can take even just a local structure here and we can clean this up just a tad here, and we'll pull a fib. Let's go ahead and pull a fib real quick just from this structure because it's stable and not moving. Bullish above 15,000. We already knew that. Uber bullish above 15,216. That's the 618. 16,4 to 16,5, 1272. I'm sorry, 16,441 to 16,700. Yeah, so this is looking for the highs. If it closes here and higher, here or higher on the weekly, we might see this before the close of the weekly. Anyway, if it does continue up like this, I'd be looking for the highs. So the all-time highs and then higher. We've got a 1618 around 17,090 points. 17,000 probably going to be a big area to 17,4 to 5 up there by the 1786 and 1888. And this is log, correct? Nope. Let's turn this on log scale the correct way. My apologies. All right, so the 1272 is coming in at the upper third. So running the lower high prior to the dump off. And that's at 16,500 basically. And then above there, the 1414 is 16,779 coming right in across the wick highs there. So yes, this is looking to run the all-time high. The 1618 is coming in at 17,200 to the 1786 coming in at 17,500, that 1888 at 17,800. So that's quite a markup, obviously, and I do think that if we see an all-time high break, we're going to get a run. It could turn into a deviation and then it all falls apart, but, I don't really, have an opinion until we see price develop up there. The weekly is saying, like, this thing's got legs to keep going, 14,400. And then, of course, we've got that monthly that's just continuing up on any closes above 15,593. So 15,600 on the monthly. This would be a higher low. On the macro time, this is going all-time highs. And probably much, much higher if it can close above the all-time high. Like, we're looking at this thing above 16,360 to 16,400. We're looking at this thing like significantly legging up, which likely prints to Dixie falling off the map and, maybe not direct QE. They're already doing, they're already funding the banks. I mean, the BTFP is the BFTP or BFTP. I forget, whatever the stupid acronym is, but they're funding the banks. I mean, like that, it's a silent bailout. So liquidity is remaining strong. It's, there's a lot of speculators in the bond market. And I bet you if Bitcoin starts ripping faces, if Bitcoin melts faces to the upside, they're going to rush through all these ETFs, right? They're going to get everybody in a position and then try to seize it. Especially if we go on a year rush towards, Bitcoin's like just ripping faces to the upside and everybody's getting in on it. I bet you they do. The Treasury and executive branch try to do something crazy. That likely would point to gold and silver and commodities all ticking up as well. I'll get more into that kind of macro stuff as we see this develop into the end of the year and the end of the quarter into the next quarter. So this looks very good. The SPY chart is also painting the same picture. And to be fair, this would be a higher low on Dow. We can't forget about Dow. It's just that the upper second's a little bit further away for Dow at 36,230 right now. So it's got a little over 1,000 points to get there. SPY is a little bit closer there. 462 is within striking distance already for SPY. We've got 16.5 or so. And, that's kind of where, above 462, 463, we're looking at this high over here, by the way, for that as well. 462 would be a legit breakout above there on the monthly. We're looking at all-time high at around that 470, 480 region. Above there, we're looking for this to significantly leg up. This would be a higher low to a higher high break, meaning that this lower high here being taken out off of a higher low, we've got higher high structure then. We've got, higher low, higher high structure rather. And boy, oh boy, all those macro guys who we already know, they can tell us all they want, and keep screaming about it. But we know that there is, that the economy sucks. The real economy sucks. Main Street's getting slaughtered. But they also have been telling everyone that the market was going to crash to brand new lows, even below the 2020 lows, and this is all terrible and everything's falling apart. And they've been saying it the entire move up into now what could potentially become a major higher low on the monthlies. Which when are they going to capitulate and be like, oh, I was wrong? Instead, they're like, it's going to double top at 460. Sure, maybe it does, and then it takes out the low, and then they get what they want. But they still told everybody to sit out. Brilliant rallies, like freaking generational wealth rallies. It's just insane to me. Anyway. But look at what the guy from The Big Short is doing. Look what Belfort's doing. He's shorting. I got a short too. I'm going to be the next Belfort. Shut up. Freaking idiots. Anyway, I'm going to stop being a jerk and I'm going to get back to analysis now. The monthly looks good on any closes above 447. The weekly is going to look very, very good above 414, obviously. And we can see that the weekly is just like, this is just now getting to the upper first. So if it does close above, 450, this is headed towards 463, which is basically, that 462 breakout area. If it gets a close above there, it's all-time high. Now, if it does drop 450, then be aware of where the basis is. Again, this is a simple downtrend break. We do want to see higher low structure being built, whether it's now or it pushes on to the all-time high and then higher lows its way out of here. That's what we want to see, right? As it stands right now, it can run the upper second, maybe even take out that high and threaten to push the highs, get everybody bearish, double top. It's going to go down and take out the lows, come down higher low, and then come back to it later. As it stands right now, it's looking good to go test the 460 to 465 area. We've had these targets on the board for quite a while. This wick high is the next one to be aware of above the 462 high, and that's coming in around 462. Wait, this one is, which one is this one then? This is 460. Sorry. So above 460, it's 462 at this high, and then above there, we're looking 465, 470 to the 480 all-time high area. But I would not be surprised to see pullbacks into higher low structure, as this is just a downtrend break as it stands right now. You do want to see for continued moves to the upside, you want to see that structure built. Maybe it takes out the all-time high before it does it. So we've got the open gap ups here. Fair game on any pullbacks to this area at 440 again. This is not. We're looking at right now 460 being the upper second, and the 446. It means on the daily it could put in a high and just hang out above the upper first right now at 446 to 450, and it's fine. The gap doesn't need to be filled. In these futures gaps, they're already. Can they get filled for participants who weren't in the market? Sure, but it's a futures gap up. If futures gapped and traditional markets gapped up at the same time, meaning that there was significantly more pressure, in deals, then maybe we see it get filled. And I don't think the gaps match. No, they don't. So there was no gap up in futures. So I wouldn't be surprised if it got filled, but it's not mandatory. We can leave the gaps behind and fill them much, much later. Looks good. So just be aware 450 drops there on the daily 446. Below there, then I'd be looking, somewhere around 440. For now, to the upside, 460, 465. And then above there, 470 to the all-time high at 480. Looks good. Man, I don't know how many times I told all you guys what was going on was not bearish. And I'm glad that some of those of you who were initially bearish understand that perspective. Then the reason why I took that particular position that I did, until proven wrong. Obviously, I was more in the camp of it was going to keep pushing, corrective structure, push back down, and then bounce up very nicely. And to be fair, if it did break down, I wouldn't have been surprised either, right? We had our criteria for it to continue to the downside. And I would say, oh, okay, yeah. I'm getting a request for a fib pull on this as well. From this correction. Yeah, the 1414, 1272 taking the highs there. 460 is the lower, 460 to 462 is the lower high area from the big move down. I would say it's above 430 to 440, looking good. That's your 50% fib to the 618. And again, this is log because we are on log scale. So that would put the 1272 at 474 to 482 to the 1414 at 482. So an all-time high run. Would not be surprised to see a pullback from there. The 1618 is coming in at 493, 1786, 500 points to the 1888 at 510. And I really do actually favor these 888s. It's been very thoroughly back tested by a good friend of the channel and someone who hangs out often in the chats here but doesn't talk too much. Back tested the crap out of this and then got me interested, and I was like, you know what? I got to go check that out. And it works very well. That's why you see it permanently on my fibs here. And that does mean that right now, if SPY closes there above the daily, it's going to the upper second, somewhere around 460, where the 100% is, where the top of the fib pull is. As it stands right now, I mean, if you take, because it is oscillating, there is a little bit more room to 430 down here structurally, which is that gap fill down here. If it was going to fill gaps, we've got lose the 888, 786 is at 444 down to the 618 at 436. Below there, we've got 430 at the 50% level, coming in right in that gap fill. I really wouldn't want to see this low getting taken out though, from the daily perspective. Otherwise, it's going to dive much deeper, obviously, to not only 430. I think that, if it didn't bounce there, it's down to the 382 at 425 and that 272 at 420 from the current move. But it looks good so far. All right, so I think that's about everything I wanted to cover. Um, Pull a fib for Bitcoin. Okay. Yeah, I mean, I pulled one prior. Let's go ahead and do Coinbase here. You want a weekly? Okay, yeah. Okay, for the current move, from the current highs to the previous higher low. Okay. Yep. Sure. I think we've pulled this one in prior weeks, but yeah. So that's where you got 30,800. It's a 50%, 32,300. So that's that 32,400. Yeah, we have pulled this on stream recently. That's that daily area just above the highs at that 31,800 breakout. But if you're looking for extensions, 1272 is coming in at that 42,600 area. So just above the weeklies that we've been talking about at 41,800 to 42K. 1414 is coming in at 45,265. 1618 is coming in at 49,500. So about 50K. 50K. Just above that high there. That's where I would, say just be aware that we could see that high in the monthly at 48,500 ran into the $50,000 level. So yeah, that pretty much matches the 1786, obviously getting up there at 52,900. So 53K, which is also a big breakdown area. This was a rejection over here from the Wyckoff accumulation on the daily, or reaccumulation hit the spring, and that was where the high was put in right there at that 1786. And then slightly above there, we've got the 1888 coming in around 55. Yep. Hey, you could take the 2 extension. Yeah, absolutely. You can even add extensions, 272, 236 if you like the 236. Yeah. Yep. The 191 is just an 888. I mean, you could do a 192, but it's just 191 is, works out. Yep. Cool. All right, let's go ahead and turn on the music here. I'll see if I can answer some more questions. I do want some time to look through some of these other chats. I see there's a lot of chatting going on. I don't know if it's directed towards what we've been talking about, or if you guys are just talking amongst each other right now. And then I also want to go and check in the YouTube chat. Yeah, so let's go ahead and turn on the Bitcoin degen chart. It's a fan favorite. It seems to be, at least. And get some tunes rolling here to cover for my reading. Oh, yep. Let's go ahead and do that. Yeah. All right, so let me go check on the main chat, public chats over here in YouTube. I see a lot of people hanging out. Thanks for hanging out. If you'd like to chat, go ahead and jump in the chat. Don't have too many chatting today, but we have No Name, hello. Spin, hello. Roka, hello. Famous for the 888, he is here. Sam, hello. Ivan, hello. Ivan, what is with the all caps, man? It's like you're screaming. That's like that's the internet equivalent of yelling. You don't need all caps, buddy. Unless your keyboard's broken. Going through first round of the playlist. Okay. Gaps. I think I talked about gaps. Gaps are just reflected in where price opens and closes in traditional markets, and because futures trades basically around the clock from Sunday till, I mean, there's breaks, but you're gonna get gaps because of where futures leaves off versus where things open and close. So, and that's typically What the heck? Yeah. Sorry, the what the heck's for something else. I've got a weird message from some spammers in chat here that I'm trying to. They're not going into the chat, but this is what happens. They subscribed and now they're trying to spam the chat, but the filter is picking it up. By the way, Mr. Ivan, if you keep typing in caps, it's going to rate limit you in the chat. Just to let you know. So getting a request to go take a look at bonds. We can take a look at bonds, yeah. We kind of, yeah, I haven't been talking about it much. It's just not as interesting as what's going on in other markets, but I mean, it's all tied together. We can see what's going on with Dixie, and we can, okay. So everybody, this is why I see why you want me to talk about this. Because everybody was like, look, it's the yield curve. The long end of the curve is catching up. And I was like, yeah, it is. It's catching up, but it's not in a position to overtake. And that's kind of where we were the last time we were looking at it. Like the 2-year looked like it was ready to take a leg up while everything was ready to kind of, or at least hold the lows and then try to leg up. Yeah, this is, a lot of the way that nobody's really interested in lending the U.S. government money on the long end of the curve right now because of the economic situation and the fact that a lot of that liquidity is instead being reinvested into traditional markets at the moment, and it's it's a cash burn right now, and nobody wants to lend the money. So it's going to lead to a big ordeal, right? We're getting the yield curve re-inverting, or as you're going to see probably a lot of people say, it's like it's re-inverting. It's yield curve inversion. The short end of the curve is higher than the long end of the curve is all that means. Which really is just, it's market sentiment. No one wants to lend this is institutional lending. I mean, retail is probably going to get in on some of these longer term bonds because what they're likely looking for is a move from the Fed. And right now we're setting up for this big battle between the mushroom eater with the mushroom head, Yellen, and Jay Powell, who's, accused of being like this moron that can't figure out economics, but realistically he knows what the hell he's doing. It's just that they're keeping the banking sector stable by allowing roll-ups and takeovers, and you're seeing that the commercial side of things is probably going to explode soon. It's already exploding or imploding or whatever the hell you want to call it. It's already well underway. It's just that these things happen slowly. Yeah, the long end of the curve is dropping off. It was all about this 10 years catching up to the 2-year, 30 years catching up to the 2-year even faster, and it's like, Then all the failed auction stuff, and it's like, okay, the Treasury needs to lean on the short end of the curve right now. They shouldn't, but they need to, because they need the money, and no one wants to lend the U.S. government money for much longer right now because of the debt. The amount of debt is just, there's no way it's ever going to all get paid back, right? So what's going to happen? Right? Is Congress going to do something? Are we going to try to default out of it? Is it going to be a combination of QE, have the Fed take on a bunch of the debt and, refi? Powell says no. Could they refi a portion though? Right? Just because he says no is like, the questions are usually like, are you going to help them refinance the entire amount of debt that they have? Like, no. A portion though, yeah, probably QE, and then refi a portion, and then, you know, do some kind of debt restructuring, and then something through the congressional side of things along with that. You know, it's really going to end up being it's going to end up being like this is setting up to be a battle. It's a war that most institutions want to stay the hell out of. Because one, they're in a fight for their own survival. Many are hemorrhaging money and trying to hemorrhage now employees in order to save that money, and it's usually not going to be enough. But you know, other markets are the international market is invested into the U.S. market here, and with the dollar dropping off a cliff, so to speak. I think it's just in a much larger range. But, you know, it's likely going to lead to a big fight between the Fed and the Treasury in the coming months. And then likely pressure being put on Congress to do something. And traditional markets and Bitcoin and gold, and, you know, we're going to see the impact, but not before everybody can get their damn positions on, right? But I mean, the silent printing propping things up is one of the reasons why you're seeing what you're seeing. It's why inflation is not coming down the way that they want it to. Why they're not going to hit their 2% target. Why they're going to have to raise targets. How the Fed is going to have to basically go back on its mandate. You can see how this is all going to set up a big fight, right? It's already a big fight behind the scenes for those that don't know. But, you know, like... No, and if the long end of the curve catches up too soon, which it was doing, you know, it was catching up pretty quick, but it was like, you know, it's a rejection, right? If you're looking at it from a chart perspective. I'm not going to bring up the Fred charts. You can just find, like, it's literally a dime a dozen right now everywhere you look. But basically, you know, they missed their inflation targets, and labor begins to fall apart, and then pressures on Congress to rein in the Fed, and it's really the Treasury that needs to be reined in and the Fed that needs to be reined in, and we just need a better system to move forward with. There's people who are working on proposals for that better system, but with this current administration, it would never get through. So be ready for real Main Street pain to continue, and they're going to drag this out for as long as possible. Meanwhile, if you're in the markets and you're trying to make money, you know, we've been doing a damn good job of calling the highs and lows, and I expect to continue that headed forward. I mean, I told you guys I was taking calls on the last low. So, and that's exactly what I did. I took some calls. I did hedge with some puts on the other side for, you know, the lower term time frame pullbacks, and then closed those and continued holding those call positions. Yeah, I've been trading gold pretty regularly, but crypto's where it's at. Crypto's where the gains are, man. Yeah. Financial system, yeah, is... I love it when somebody who's like already fully stacked with their FinResearch and the financial system is just a big Ponzi scheme. Yeah, it is. We know that. That's why you guys are watching me talk about Bitcoin. Right? Right. All right, so I think that's going to do it. Let's look across the chats here. Fib levels, yeah, I'll probably talk about them in an educational format. There's things to get through before that, though. Particularly video about, you know, how to understand price auctions in terms of price action, trend, support and resistance, volatility and momentum, and then get into more detailed things like Fib levels, which is just Fibonacci levels, Fibonacci retracement, log versus linear scale, and what the important zones are. So the 382, the 50%, and the 618 are the most common. And then the more advanced stuff for lower term time frame analysis, and then probably get into trend-based fibs. It's another one. In fact, we can even just throw a trend-based fib on here on the daily, and we can go from. I mean, you can pull it in many different ways, but you can like go here and you can say, oh, look, it's the 2618 to the 3 to the spot 3. That's not the way I would necessarily want to pull it. Also, it's not log, so you would need this. And you see that we are on a 214. That's not really the way that I would pull this move. Pull it from here. And see that the 50% is at 38,400. Basically the monthly, and the 618's up there at 39.3. I'm sorry, 39.6 to the 702 and the 786, which is up at 41.5. So basically 39 to 40K would be the next area I'd be looking on any breakouts above that monthly at around 38.5. Easy. Mortgage rates are, I mean, they're moving up. So if you look at, 30-year fixed has moved down on the weekly here. Actually, this is trailing data, so it has moved down since it's high up here at around, what was that? Almost 8%. But you got to remember, they're going to pack in above this rate, so 7.44%, likely headed down towards 7.25 to 7%. It's weekly's pointing in that direction. Below 7.5%, the monthly starts to fall apart. Mortgage rates start coming down. It's likely. This would likely. It's still in a stupidly bullish position. If anything, you see it hang out around 7%, maybe tick down to 6.5%. Over time, like in the coming months, we're talking like long time frame. But this could be the beginning of it over the next few weeks. But right now, and this is something I've been talking about for a while. Like, we looked at this earlier this year on even bond yields. Like they're topping out on the quarterly. Like the 30 years topping out on the quarterly, the 20 years topping out on the quarterly. It can't even populate on the 20 years. Sorry, the 10 year topping out on the quarterly. It doesn't mean it can't push forward for another quarter or two or remain around the highs, but this is getting ready for like quarterly pressure down, which is, in that case, we're talking the next 1 to 2 years, aggressive pressure to the downside. 5 years, same deal. It's not crossed yet. The end of this year into next quarter is probably going to cross. So, I mean, there's relief, but we're probably looking at 2024 into 2025, maybe even, 2025 into 2026 as things get sorted out, especially if there's a different administration that would, what is in there right now. And that's not me telling you that one administration, no, I am telling you there's one administration that would definitely fix the problem. And the current administration would not, but there's two different sects, there's two different administrations that could potentially enter in terms of contenders when you're looking at the political field that have actually been addressing the specific problems going on in the economy. And out of those, big headline names, you have Biden, obviously, you've got Trump, and then you have RFK Jr. And Trump and RFK Jr. have been very focused on talking about fixing things within the economic structure and system, and even down to banking and Bitcoin. So whereas the current administration is pretending that everything is fine and there's no problems and the economy's great. And that's just that quite frankly is not going to fix any of the problems that we're looking at, in terms of what's going on with the treasury markets, what's going on with the Fed, with debt. They're just, they have no answers. So it's just put blinders on, and that's not going to fix anything. So honestly, when we're looking at the charts, they're telling you there's going to be a major change, and I doubt that change is going to come with the current administration. So we could even be looking at political projections soon by looking at the markets. And by the way, some of the most accurate political projections have come by looking at the markets, just so you know. There is, as we get closer to election season, I might actually bring up, there's a guy who studied this and extensively throughout the years and was posting about it all through the various elections, and pretty much calling the presidential candidates, with the exception of the last election at 2020. I think they missed, but they had a streak of calling, this is not a politically biased thing. It was just looking at the markets versus looking at the policy positions and comparing them, and then seeing if there was going to be a changeover from one administration to another in terms of party. And I think they were 100% accurate until 2020, and they were just using market data and economics, but in the way that we are looking at it, not the fundamentals, yes, but also looking at the kind of things that we look at, volatility, momentum, and stuff like that. It's pretty crazy. Maybe it's something I'll get into. Who knows? But we'll see as time goes on. Okay. Yeah. Well, I know that there's guys over there. For instance, there's guys right now that are in the class there that are studying FINRA. This goes out to the public stream, so I can't talk specifically, but this is live on YouTube for those of you that don't know. But for those of you that are studying for your FINRA stuff, as you get more into understanding the ins and outs of the regulations as it relates to how you're going to be performing your day-to-day job, you're going to find that your eyes will be opened to the political side of things, right? That's whether it's executive branch policies or congressional stuff or regulatory. Specifically, it's a lot of the regulatory stuff, but where's the pressure being applied? Are they being reined in? Are they being allowed to do whatever the heck they want? Who put them in that position? Who nominated them? That kind of stuff. It's going to be a big talking point for those of you that are new to the industry. It's going to be something that is heavily talked about. So you're gonna encounter a lot of politics in this job because it's relevant. It's relevant to the firm making money. So, yeah. And the difference between here's the difference. Difference between a firm and a liquidity providing firm or prop shop, market making, whatever you want to call it, is that it depends on the specific focus, but you're less concerned about the political wheeling and dealing in favors. You're more concerned about the regulatory side of things and the oversight side of things, because that's really what is going to affect providing liquidity to specific markets, assets, and indices. Yeah. Cool. Yeah, regulations, man. That's why we look at the free-for-all that is the crypto markets. I mean, it really is a free-for-all. But that's also a free market, right? Whereas I love the crypto scammers. Everything about crypto is a scam. Like, well, yeah, there's a lot, but look at all these freaking companies that are just pure scams. They have no idea. When people say that, they have no idea what goes on in traditional markets. It is so rife with just bullshit, and it's regulated. And a lot of people don't seem to understand that. There's ways around every regulation, and there's companies that are fly-by-nights constantly. They're basically just shit coins, shit founders, and yeah, I agree. And the problem is there's very little recourse even in the traditional market space. Like, they think that regulation is just going to fix everything. I don't get me wrong. I think that regulation is needed, but regulation in that there is a way to mitigate and or regulate some of the scam side of things, and then let the free market take over the rest. Bitcoin is a beautiful free market asset because, like, no matter what are they all doing, they're all scamming to get more Bitcoin at the end of the day, right? Well, because what are they doing? They're selling their altcoins after all the runs, right? To what? USDT and USD, to then in the bear markets go and buy Bitcoin to then try and do it all again, right? So it's really a big con. Whenever you see it, it's a big con to get Bitcoin at the end of the day. It really is, yeah. I mean, could we see it? People want to sit on ETH for the rest of their lives? Sure, maybe. Is it going to beat Bitcoin? No. Is Litecoin going to beat Bitcoin? No. And I like Litecoin, even though its chart sucks over the longer term. I use Litecoin. Yeah, I use Litecoin, so I own a ton of crypto. I mean, it's not just Bitcoin. I even own meme coins. Yeah, go figure. I even trade them. I know, big shock, right? But, I focus on Bitcoin because it is the market leader. It's going to continue to be the market leader. And no, Solana is not going to flip it. And no, ETH is not going to flip it. And if they did, there's serious problems. And or we've got a fiat system that's trying to oust Bitcoin at that point, right? Like that's where you would see, like, okay, Bitcoin ETFs are launching, ETH ETF, Solana ETF, and like all these altcoin ETFs. And then you see like preferential treatment on the ARB side for those, and to keep them growing, and then try to get them to surpass Bitcoin. But Bitcoin, because of the way it's built, like, altcoin maxis can accuse me of being a Bitcoin maxi all they want, but because of the way Bitcoin is built, like, it's just going to outrun everything over the long term anyway. Cannot be stopped. Trojan horse the entire financial system. That's what's going to happen. Excuse me, I'm drinking my coffee. Sorry about that. Yeah. Look, yeah, no, I have no problem. I love technology. I love everything about, the excitement around projects, and I see the utility in NFTs, where I know a lot of people are just like, JPEGs on a blockchain, it's only linked. Well, inscriptions are a beautiful thing for NFTs, and that's not just JPEGs on a blockchain. It's not just a link or URL link. Like, I see the utility behind it in terms of, like, okay, my son is disabled. I want to start a charity. And in order to, what was it? There's a big gaming YouTuber who was just called out for having a charity that was a scam. What's his name? Gerard, the Completionist. That's right. Yeah. So apparently he's got like some big charity that he fundraises for every year, and he's been doing it since, like, I don't know, over 10 years or something. And none of the money has ever flown out of the charity to the charitable cause, right? Even though they claim that that's what they've done. Now, the big contention, I believe, there is like, oh, hey, they still have the money, they just haven't spent it yet. But I think that's complete bullshit. They probably spent it all. Now they would have to, like, inject a bunch of cash, which you could see in any kind of an audit. So they need to be audited in order for you to figure out if they, it's highly unlikely that they've had 10 years worth of cash just sitting there, right? Anyway, that's besides the point. But where NFTs could be very valuable is like, okay, you're a charity organization, you can mint an NFT for each time that the donations go out, so you have a provable blockchain record, or you could just have it on the blockchain, right? You don't even have to have an NFT, but you can mint the receipt. Like, say we fundraise for $10,000 for kids with disabilities and go and give it to the hospital. We mint an NFT showing that money was transferred, or we mint basically the official receipts back on the blockchain, or we utilize the blockchain itself to sign the contract for the to create the contract for the transfer of funds to the charitable cause. Like, there's all kinds of things that can be done there, and that's a beautiful thing, and that's not something that's currently easy to do with Bitcoin, although you can transfer Bitcoin, but the organization's got to be able to, and you would then have to make the public aware of who holds what wallets and that kind of stuff. So there's still, it's a problem that would need to be solved with Bitcoin, but obviously there's a lot of newer advancements happening with Bitcoin that are showing that it can have viable contracts as well, if you're not aware. That stuff's being worked on. It's very exciting. There's limitations as it stands right now, but the more limitations that are put in front of these developers, they're coming up with really innovative solutions and ways to use Bitcoin, and as basically to create contracts and do what alts do. Yeah. So there's that. Yeah. So it is really, it's going to be interesting going forward for Bitcoin, and particularly whenever we see an ETF launch. One of the big things, and I'm telling everybody right now, this is for those of you that are watching the public stream on YouTube, for those of you in the on the private streams over here, there's nothing different, by the way. This is all public. It's just that some guys can't access YouTube from where they are. Yeah, because network restrictions are a bitch. Yeah, well, I mean, it makes sense, right? But let's put it this way: when we do see a Bitcoin spot ETF launch, one of the big things that's going to happen is, as people are buying the ETF wrapper, and filling portfolios out and or looking into it, one of the big things that you're going to see is a wave of development happen on Bitcoin as well, because it's going to incentivize more innovation within the Bitcoin blockchain ecosystem of things that is being built, that are being built. Yes, there's big debates between all these different guys about channels and Lightning Network and all the different stuff, all the different development, like with Taproot and that kind of stuff that's going on with Bitcoin. But ways in which Bitcoin is already able to be utilized, there's some really cool, innovative stuff on the horizon, and it's only going to get cooler when it comes to Bitcoin. And, a lot are prematurely saying like, it's the death of altcoins. I don't think so. They're going to have their utility, and you're going to have every single company on the face of the planet that's going to have an altcoin at one point. Think of it like you're going to go in and instead of getting an Amazon gift card or a Walmart gift card, you're just going to get whatever the equivalent token is, and you'll have the ability to hold it, trade it, do whatever, and then you probably get incentivized to use it at retail. You're going to see that all over the place with altcoins and blockchain technology. So you go in and you pay your for whatever. You can even probably buy it on a card, or they can use their existing infrastructure within their own incentivized ecosystems. I mean, you earn points and like all this other stuff. That's just going to become coins. They're all going to have their own thing. Yep. It's already under development in most companies. It's just nothing's ready for primetime rollout, and there's a lot of regulatory clarity that needs to be had there, because they don't want to step in it and then endanger their retail side of their business, especially if they're already not doing well because of other things that are going on, whether it's social stuff or like your Target getting in hot water over some things with certain groups of people and not others. And then you've got, the same thing happening across the board. Backlash against them in one way or another, whether it's from the right or the left, doesn't matter. Left is after them about things going on in the Middle East and in Israel, and as is the right. And then there's social stuff, and none of that matters. So they don't want to also step in it by getting into tokens. I disagree, Roka. The fees are only high if you're sending large amounts. And yes, that is only going to increase, but I disagree. The solution for the fees, I think, is overblown. These are also the same people that didn't say a word about ETH fees, gas fees. So a lot of the conversation where this is starting, and it's not just because of ordinals. It is, that plays a huge role, though. You are correct. But I disagree with that. There will have to be a solution. It will work itself out. There is mechanisms in place on the blockchain to specifically work that out. Now, where you start to get into where that becomes an issue is on the miner side of things, is the reliance on the fee structure increasing like that in kind of a parabola fashion. So I agree with you. I disagree that it's a problem right now, though. And I disagree that it's going to be a problem going into the future. I think it's a pretty easy problem to solve. And it's not all on ordinals, although that is a contributing factor right now, currently. Just the latest in the long line of things. And it will get solved. There will be a solution. And there's Lightning Network stuff, but I just don't think that Lightning Network is going to work in the way that makes sense, because you do need to build up to mitigate the smaller fees because of that fee increase. Yeah. I get you, man. I get you, but it's not $135 in gas fees for less than $500 of ETH, right? Like, or something running on ETH. Like it is a much, and I understand the perspective that you're coming from. So 100%, like I get like where you're coming from, but the fee structure, there's plenty of time to work on how that looks. And there's been newer innovations, and they're currently being tested on Bitcoin's blockchain that allow you to really form contracts within Bitcoin that will help mitigate that. And if that can be done, you're going to see fees come down. But realistically, you got to understand that Bitcoin miners have to rely on fee collection in between, block rewards, right? So, or for the block reward, so you get the block reward and the fee. And the biggest thing is, I think I said that right. Anyway, you'll have to correct me. I'm talking fast and I just drank all that coffee. But either way, what ends up happening is you're going to end up having a scenario where we need to see the next step being taken. We're starting to see that behind the scenes, and that's where Bitcoin is everywhere in the power infrastructure. It's already attached to the power infrastructure, where a lot of miners give back to the grid, in fact. So that's something that only now is being talked about. We went through like 2 years of them calling it an ESG nightmare. You're not going to see a DEX. Decentralized exchange. Yeah, these are all short-term solutions. So I'm reading what Roca is saying in the chat here. He's very up on what's going on in this space. And one of the things that he's bringing up is like, the way that the fee structure is right now. And he's talking about decentralized exchange, not a decentralized exchange specifically, but kind of because of the way that things are happening. Now, I don't know if you've read some of the newer developments on Bitcoin in relation to contracts. That would keep it as existing. It's not centralizing things into channels. It's not centralizing things into a few players on the market. So it's, Stacks is one temporary solution. Ordinals, yeah, but we're talking, this is all very small right now. When you really start getting into where Bitcoin's going to be transacted, I don't think it's going to be in the way that people think. Bitcoin will always run parallel to some sort of a monetary exchange system. This is where I disagree with the guys that think that Bitcoin is money. Bitcoin is money because it's going to be the thing that keeps a derivative system in check, right? So whether that's the US dollar or something of the like, when Bitcoin is really everywhere and ubiquitous, it's not going to be because you and I are transacting in Bitcoin. It's because we are transacting in something that relies on Bitcoin. And it's going to be a derivative of Bitcoin. And this is where I totally disagree with those that think that Bitcoin is going to be something that we are going to transact in day to day. Do I think it's cool to do it? Yeah. Am I a proponent of doing it? Yeah. But who's going to want to give up their sats the more restrictive that supply gets, right? Instead, it needs to be utility. And in fact, it's going to be in your utilities, energy production. And it's going to be the check and balance ledger system that is going to infect everything in a good way. All right, it's going to spread like a virus. It's going to spread throughout the entire financial system and the entire base layer that society operates on, and that's electricity. And it's going to have many different applications. And because of that, any system that runs on top of it now has a layer of transparency and built-in protection via running on Bitcoin. And that is really where I view things in the longer term. So fees don't matter. It's going to take a while to get to that point, but an ETF wrapper is one way to do this. And part of that is, yes, a lot of whatever's in the ETF wrapper, from whatever company you're buying that ETF wrapper from, whatever listing or offering, that's all going to be custodial. Like, you're not going to actually be holding the Bitcoin. But the more that gets out there, a certain percentage of that will be redeemed for the underlying asset, that being Bitcoin, and then deliverable so that they can start projects. There's already talks about it even in my local area. Power company wants to get into it because they get incentivized to do some of these things and reinvestment into certain things, and then they can onboard whatever's in the underlying ETF wrapper. For instance, they can take a portion of that, onboard it while they're running their money, during off hours. And this is to be utilized, not to be spent in terms of the way that, trying to make money being spent, but to be utilized. And I do think the utility behind Bitcoin is going to outstrip the money conversation because it's bigger than money, in my opinion. It's bigger than monetary exchange. It's literally, what's the best way to put it? If it's bigger than monetary exchange, it's societal. I think that's really the view that I take on Bitcoin. Now, you could say that, oh, you're just a maxi and you hate everything. No, I just think that this is where things are headed with Bitcoin. Once it starts to get into the mainstream, starts to, really get into the rails of the fiat money system, There's many different paths that it can take. It's basically going to Trojan horse its way into everything. And you're going to have innovative uses of Bitcoin, but at the end of the day, like, it's going to be about the utility, not the monetary transact. Because there's going to be something, whatever that looks like, on top of it that it will be paired with, that it is now able to be used as a check against. And whether that's energy production, whether that's monetary, which is just the output energy of a society, right? So, monetary wealth is the output energy of society. One of the reasons that we are, it is literally energy, right? It's expended energy at every level, whether it's, taking a fossil fuel out of the ground, whether it's, digging launching a rocket to space. All of it is energy. It's human energy put into something that is creating value, right? So one of the problems that we have, and it's an intrinsic problem across all of our different countries, because I know many of you are from other countries. What is the big problem? Well, the big problem is they are spending money beyond the energy production. And it's not just fossil fuels or solar. We're talking about societal energy production. And Bitcoin is a way to counteract a lot of that, or have a check against that overextension and free ride that they've given themselves in many cases, and against their own people, these governments, meaning and regulatory bodies and outside institutions like the federal banking infrastructure, which is not in many cases a part of the government. Like here in the United States, it is not. It's called the Fed. It has nothing to do. It's a private organization. It's a private bank, right? But in this case, they've allowed and facilitated the overextension via various means, from Congress to presidents to elites within society, to overextend way far beyond the energy production of the nation. And again, when I say energy production, don't just think electricity, oil, gas. We're talking about entire energy production from the people that encompasses the entirety of society. And that's where Bitcoin is going to come into play. And I think that is, there will always be some sort of a rail that is running over top of Bitcoin. But once it infects that system and becomes a societal norm, again, not that you're going to be dealing with Bitcoin every day, because for the normal, regular, everyday person, it is very difficult to comprehend, especially coming from the systems that we're currently using, to then move into a system like Bitcoin Standard. That's a big one, right? Great book, by the way. All of the different books. I'm a big proponent of it. But at the end of the day, even if we had a Bitcoin Standard, some derivative will be on top of it, right? It's inevitable. No matter how many, you will find that some derivative, some wrapper is going to be put around that, so that we end up avoiding the transact, right? Because at some point when there is no Bitcoin left to be mined, it is going to become that transparency layer to society, allowing you to look into the energy production of society, and it's got an auditable, traceable history that I think is just going to become, I think it's one of the greatest innovations in human history to this point, that can allow us as a human race and society push forward, but it's not going to be easy. It's already not easy. It's not going to get any easier. But once the ball is rolling, which it's inevitable, it's going to roll. It's just how long did they take to try and slow it down before it gets there? And you'll always have ways to make money in different forms that will then, at the end of the day, always be for the purpose of obtaining more Bitcoin or societal energy. I hope that explains my position on it. Now, all of that being said, I'll step down from the soapbox. Roca is 100% correct in what in his assessment, in his alternative that he's looking at, which is stacks, which I like, by the way. I like stacks a lot. And there is there's a lot of problems to be solved on that side of things. At the end of the day, I think they're short-term issues versus the long-term outlook. I guess that's what I'm trying to get at. I don't think you're going to ever... So is there an era of crypto coins in every... No, you're not even going to know you're using a crypto coin. Everything is going to be eventually, even if it's not leading the charge. Like, let's say there's a CBDC. Bitcoin will infect everything. It is the Trojan horse for the entirety of the underpinning energy production. It's a check on the entire societal energy production in terms of a check and balance system. Whether it spends time as a stint of being a monetary exchange or not, who knows? I don't think it will get there. I think it's going to be silent in the background. Everyone's going to declare it dead. It's never going to be the standard, but it's actually going to be the standard because it will be everywhere, and allowing regular everyday people to go in, and the tools will get better to go and audit the blockchain. Is the power company locally giving you a fair shake? Right? Are the local politicians laundering money at some base layer? And you'll have a way to figure that stuff out via Bitcoin underpinning just about everything, even though it's not outward facing. That's what you're going to see. I'm telling you right now, that's what you're going to see. Give it 10 years, maybe a little longer. That's what you're going to see. And then you can have your Ethereums and your everything else, but at its base layer, when you go to exchange it, you exchange it for whatever the US dollar is at the time, or the equivalent. And at its base layer, what is it really running on? What is the real auditable network underneath it? What is the societal energy output that is auditable? It's going to be Bitcoin. Yeah. I don't know about the collapse, bud. I go back and forth on that. I go back and forth. For me personally, I don't know that there's going to be a collapse. I think that, personally, like what I explained, I think that Bitcoin will worm its way into every facet of energy production and output of a society. And through that, we're going to see transitions into other things. The U.S. dollar maybe won't be the U.S. dollar. Obviously, the peso in Argentina is going to be the U.S. dollar pretty soon, which is just a bridge to get into what they are going to try. They're going to try a Bitcoin standard down there, according to the new president, who is an economics guy. He understands economics. He's not stupid. I know that a lot of people are like, oh God, he's going from Argentine peso to another worthless fiat currency, but it's a stepping stone to get into where they want to go, which is something that he's talked about many times. And you got to take down one system to transition into another and have something that underpins that layer. And what do you think he's doing? He's going to use the US dollar system to get into the Bitcoin system and have that be the underpinning layer that provides the checks and balances that runs in the background paired with that system, so that there is transparency and accountability. Build it into their books at a central planning level or a societal planning level. That's really what they're doing. You're seeing it right now. And that wasn't the most stellar rollout in El Salvador, I know, but that's also where they are headed. It's just kind of a little bit of a more muddled situation, not quite as clear cut in what they said they wanted to do, but they're getting it done. I've got family in South America that is pretty up and up on what's going on down there, and I can tell you they're getting it done. So this is the way that things are going to head. How long before it heads to some of these other areas? Like Roka said, he looks like it's an inevitability that MMT system collapses at some point, and then Bitcoin becomes the solution. I think it's going to be the solution already, and that collapse is a soft collapse, or a transition, if you will. And I do think that because Bitcoin will be worming its way in through Trojan horse means, that becomes an easier transition the longer the Bitcoin has to kind of worm its way throughout the energy system, the energy output system via the financial system. And I do think that an ETF accelerates that, because right now it's very difficult, for instance, for a city or a town to hold Bitcoin. They can hold an ETF wrapper, obviously, and they have the right to redeem those ETFs. It makes it much easier for a lot of these cities that want to get into Bitcoin to get that, and then also insure against it, because it's very difficult to insure against it, where you can insure against that particular asset if it's an ETF wrapper, because the framework is already there. So I think it's just, as soon as you see an ETF kick off, whatever price does, whether it moons and never comes back, who cares? The point being that, or dumps and, whatever, who cares? The bigger issue at play behind the scenes is going to be, how is it being utilized behind the scenes? And you're going to see all kinds of, stuff come out, regardless of what happens. And, I hold a different viewpoint, but it's also kind of synergistic, because I'm only just reading a couple comments here and there from Roca, who's, I think, probably one of the more brilliant minds when it comes to analyzing and formulating an opinion about this stuff, as he's been in it for quite a while. And, even though I might hold a different viewpoint, doesn't mean that I'm going to be right. But that is the way that I see it, if you'd like to know my opinion. So I guess that ends my TED talk. my TEDx talk here about monetary systems and Bitcoin and societal energy output as a exchange medium, which is really what we need the check on, because America doesn't produce much in terms of societal energy output right now, outside of the innovation in the tech industry. A lot of that societal energy output is coming out of China, and America's way over leveraged, China's way over leveraged in terms of the monetary system built on top of that. It will, that's where I do agree with Roca, that it will collapse in on itself, and Bitcoin will be there, but I just see it happening as more of a transition than a collapse, or a collapse into a transition, I guess. Yeah. You know what? Doesn't matter who's right. It matters that we understand what's going on more than not. And it's actually not even about who's right or wrong. It's more about, which way are things going to play out that's going to be beneficial for society and for all of us personally as well, right? So give me a like for encouraging words on society. Sub for society's sake. Yeah. Oh man, the conversation going on over here in this chat is hilarious. I cannot repeat 99.9% of the things that you guys are saying over there. Somebody said, no, Roca's a friend. He's not one of you guys. No, it's not Jimmy as far as I know. Is Jimmy not there today? Oh no, he didn't set everything up today. He's out sick. What if Jimmy was Roca? That'd be crazy. Yeah, it does sound like the conversation you had with him. Yeah. No, I mean, no, Roca's a friend. He's, there's a few friends that I have in here on the public side of the stream. There's other people that I don't know personally, a few. But yeah, I mean, they're all beautiful people all around, no matter what, whether I know them personally or not. Okay, so yeah, I think that's gonna end my TED Talk and the subsequent analysis that was done a while ago. At this point, we got to talk about a lot of stuff today. I'm glad that everybody hung out. I do see quite a lot of people actually in the YouTube stream, but not necessarily chatting here. I want to thank those that are. If you would like to chat, go ahead and subscribe, and you're free to chat. It's also free to subscribe, and it helps out the channel. Throw me some likes if you are in here watching. It does also help. All the info is free, and yes, there will be training material and info soon. And as soon as well, it's not really relevant for the way that my channel is right now, but when an ETF does launch, I'm going to be talking a lot about options, and I will also be putting together some primers on how to putting together a couple primer videos on what options are, and kind of reviewing what options are, what calls and puts are, and how they work, how you can buy and sell them, and then the Greeks, and then some basic strategies. I know I've said this before, but it's not relevant. I was asked about it, like, hey, why don't you put some of that out now? It's not relevant to anything that we're doing right now. Most of you can't trade some of the options on these exchanges anyway, and if you do, I wouldn't suggest it. Liquidity is really, really thin, and it's more for, if we're going to talk options, it's going to be more towards the guys who can actually trade CME over there, right? Like, so that's not really relevant right now. It will be relevant when an ETF is launched or approved, when they're approved, and then we can start getting into it and then start prepping for the launches. You're probably not going to want to get in on the options trades right away anyway, upon launch. So that's going to be big, and a big focus. So still all the traditional analysis stuff, but we're going to be probably analyzing a lot of options data when those do launch. In addition, there's going to be some primers for the basics of technical analysis, my strategy specifically, and then the options stuff. Yeah. All right. I think that's going to do it. I want to thank everybody even. I was going to say everyone, and it came out everybody. But I said it really fast, so it kind of sounded like everybody. But anyway, either way, I want to thank everyone for hanging out today. I hope you had a wonderful weekend. Here in the United States, many of us are off for the week, so markets might be a little odd. There are some people that go into work, except for the latter half of the week, like you guys over there. But it is Thanksgiving week, so a lot of families got kids at home, and a lot of people taking off for vacation, stuff like that. So I will be back on Wednesday with a live stream, and I will try to get Bitcoin in 60 seconds videos back up this week here. And I want to thank you again for hanging out with me. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And no matter what, above all, stay safe, because it is a crazy world out there. And just stalling so that I can get my little end of stream timer up here. And music's already going. And yeah, that's going to do it for me. With all of that being said, thank you again, and Landy out.
If you had 24 hours with me and I couldn't say no, what would we do?
Okay, so first thing you're gonna do is you're gonna read this document from front to back. It's a bit technical, but so are makeup tutorials and economic degrees. Speaking of which, if you have one of those, you're gonna rip it up. It's probably based on a bunch of Keynesian nonsense anyways. Then you're gonna put some clothes on, go to your bank, take out all your cash, and go buy some Bitcoin. You're gonna take it into self-custody immediately, and then you're gonna spend the next 20 minutes putting your seed into some steel. Putting your seed in steel. That sounds weird. Oh well. Then you're gonna load up on some podcasts, dump out your seed oil, go outside, touch some grass, sun your balls, find a friend with a diversified crypto portfolio, smack them across the face, and sell their coins for Bitcoin instead. Then you're gonna book a flight to El Salvador, read even more Bitcoin books, and once you arrive, Max and Stacy will pick you up in a van, and then you're finally going to